I don't think any of us can play the voice of God and the market will choose. So if the market wants cheaper, less, why we're seeing volatility right now is the shift of narratives. Markets don't like that shift. The issue is it's not being used as such by anybody. Having a philosophy doesn't really help you as an investor. My view on Bitcoin kind of remains what it always was, which was, and I coined this a while ago, is I think of it as the kind of perfect collateral layer of this new digital economy, because it's pristine collateral in the way that it can't be debased. You know, if you think of how, let's say, a treasury bond works, it's kind of weird because when everybody needs treasury bonds, the Fed creates more of them. So your collateral is actually worth less over time, which is the debasement of money idea. Now, you can't do that with Bitcoin. So if Bitcoin is your base layer of collateral, then what you get is an ability to get paid for people wanting collateral in a collateral squeeze, which is what the financial system needs at its base. But it became obvious to me that Bitcoin doesn't solve every problem. It solves certain problems really well, and others it doesn't solve as well. That was really my evolution. And then as the space broadened out, you realized, okay, this is an incredibly deep, fast-moving space with so many applications that it doesn't make sense to be all on one blockchain. Different blockchains will specialize in different things. So that's basically my Bitcoin hypothesis. The only thing I can't square in my head yet, you and I both talk about it as a base layer or pristine collateral. The issue is it's not being used as such by anybody. That's I can't get my head around, because actually what is the collateral of this current system is ETH. Now, I'm no ETH maximalist either. I'm just an observer. And I'm like, I can't square that away, because it's not like at the bottom of every DeFi protocol is the collateral of Bitcoin. And I think the point being is they're two entirely different things. I think violently agree with each other. And I think that makes sense is it depends what kind of adoption we're looking for within it. If we're looking for nation states, corporate balance sheets and others, then stuff like Ethereum doesn't make sense because it's not trying to be money, it's trying to do other things. But base layer of money, yes. I mean, it works at that kind of sovereign state level, corporate level, a supranational entity level. Yeah, and it depends how we address this. If you address it philosophically, that's fine, but we also have to address it as investors. Predictability itself does not necessarily generate superior returns. I mean, and so that's how I look at the ecosystem. I look at network adoption, now whether that's Ethereum or Solana or NFTs or any part of the ecosystem, and use that as my guide. Because what I'm trying to do here is capitalize on participating in a technological revolution. Some of that is money, and that can be separated out. I can just own some Bitcoin. But like we do with US treasuries, we don't own them all the time, because there are times when you want to go out the risk curve and times when you want to come further closer to the risk curve. So that's kind of how I think of it. But I think over time, these things will be proven out and where they fit in the ecosystem. And, Ethereum's network adoption has been faster than Bitcoin recently. So we've seen that growth. Will that play out in the next 5 years? No clue. But our job really is to find that. Having a philosophy doesn't really help you as an investor. However, I also believe that, because every time I've seen people with an anti-Fed philosophy or an anti-this or a pro-that, they always get killed. There is a difference in this space because the technology is integrated with the network itself. So people can be philosophical builders on this network because they want to build a better future. And that's great. And I completely encourage that. But don't criticize somebody else for not sharing this philosophy, and that if you don't, then you're a heathen. That smacks to me of religion, and it's not. That shouldn't come into investing. So if the market wants cheaper, less decentralization, faster, those trade-offs the market will take. And we can yell from the sidelines saying, how dare you do this? And we sound like gold investors. We have to be really careful on imposing our wish versus what the market chooses, because if not, we get left behind often by sticking to a prior narrative. I think what I do love about this space is there are people focused on specifics, so spreading the core philosophy of Bitcoin. If they can get network adoption of their narrative, fantastic. It's good for everybody. It's more fluid, I think, than people want it to be. How are you going to stop it? In a free market full of entrepreneurs all looking for an edge, it's impossible to stop. Now, so you have to hope that the market sees the relative differences and understands the trade-offs. And we can talk about that and explain it to people. But the point being is, because it's decentralized, it's not like Google making a decision here. There's millions of entrepreneurs deciding to try something different. And we can't say don't. No, I look at it at a much broader level than all of this. I look at it as enabling the digital age for the transfer and ownership of value in whichever format that comes. And we will have millions of different needs and use cases for millions of different things. Which ones survive is like any business. Which network survives? It depends whether people believe in it, they find utility from it and value from it. If that is the case, it can survive. But we don't know where this is going. So I'm not thinking of it in any way as an investor in my long-term horizon, apart from the fact that it's probably, whatever it is, $2 trillion today, and it probably goes to $200 trillion. How that's composed in the future, I have no idea. But what I know is where it's going and why it's going there, because to create the internet of value, which is distributed, giving ownership back to the individual away from giant corporations, is something that the whole space is building towards. So that philosophy everybody shares, which is interesting, versus the specific philosophies of different protocols. I don't believe in a winning blockchain. I think it shifts over time. I believe in interoperability and the fact that we will choose to trade off. Let's say we want to give out some NFTs to Real Vision users. Now, we might not use Ethereum because it's going to cost us $250 to mint. So maybe we use another chain. But if it's interoperable, you can then store it in your Ethereum wallet. I think we're so used to the monopolistic tendencies of large corporations who can create moats that we forget that this is almost the opposite. And we don't know what the outcomes are. And that's half the excitement of the space, is not knowing. Now, as you said, I don't think there's any competition to Bitcoin at that moneyness layer, but that base layer, that pristine collateral, because nothing else is trying to solve for that, because it's actually hard to improve. But for the other elements, once interoperability comes in, we can use Bitcoin, Ethereum, Solana, whatever we want, interoperably for different purposes. That's going to create a whole new hybrid structure of opportunities that we just don't have today, which is interesting. Yeah. I kind of think that each individual network has its narratives and sub-narratives. If that narrative is attractive enough to enough people, it will grow as a network. And if it's not attractive, it won't grow as a network. So Shiba Inu is unlikely to grow as a network over time unless it has a network utility, which it currently doesn't have. So in which case, interest dies over time. So it's the same if somebody sees something is too centralized and the crowd, the hive mind of people involved in this, decide that that's not what they want, they will migrate to a chain that has more decentralization. I don't think it's up to us to say, but we can choose the ecosystem we want. So I choose to be a more active participant in the Ethereum ecosystem because of how it treats its network participants, which is less combative than those in the Bitcoin ecosystem. That will change over time too. Narrative shift, people shifts, that kind of stuff. But I think we tend to coalesce around places, networks that we feel suit our needs. And if the market decides that decentralization, the ultimate decentralization, is the need, they will coalesce around Bitcoin. If they don't, they won't. Fair. And again, that's what makes it super interesting, both from an investment and also from a larger philosophical standpoint of this is a ant colony hive mind building out a financial future where no one person has a say. I mean, it's incredible. I've spent a bit of time looking at investigating why people react the way they do on social media. And it's never for the reason you think it is. I got involved in anti-climate change Twitter. And I actually singled off a few people to have a conversation. Like, what is it that you actually fear? Why will you not take Pascal's dilemma? Why will you not think that the upside of less pollution and greening takes away the catastrophic downside? Why would you not take that bet? And the answer came back from many people is we don't want our gas prices to rise and we don't want them to increase our tax on our petrol. So what it was an economic situation that has spilled over into a philosophical situation. And I think we'll probably see the same in Bitcoin, where many people have got into that network, they believe in it as their store of money, and they don't like it if it gets threatened because they don't have a lot of money. And it's terrifying to them, and rightly so. And I get it. I understand why emotion spreads so much, particularly when it's a network that you own a part of. So it's a really complex psychological thing, as well as an economic thing, as well as a financial thing. Because Metcalfe's law would state that it's the number of connections on the network and the interconnectedness, right? Bitcoin has an issue with the interconnectedness because it doesn't use smart contracts as yet. So you're creating less interconnections between the network. It has some giant network participants, but networks aren't driven by the single large participant. It's driven by the whole thing. So what you've got to look at is what is the user growth and the transaction growth on Bitcoin versus other chains. And you'll find that it was more lackluster than others over the last 12 months and hence why it underperformed. So I'd be cautious of not thinking you need to treat people in the network. Some people on Twitter, some people, right? Some people, I love Bitcoin people who believe in the philosophy, want to work for that world. I love it. I can hold the view in my head of hyper Bitcoinization. I can hold that view and I have no issue issue with it. But on Twitter, which is many people's on-ramp, if you are attacking them, then you're not going to on-ramp them. Really that straightforward. So the macro environment is, I think, why we're seeing volatility right now is the shift of narratives. Markets don't like that shift. So the narrative was the inflation shift. The inflation shift last year, I think what happened is inflation was real and inflation destroyed marginal spending and marginal investing. And I think we've seen it in meme stocks. We've seen it across the market. We've seen it in cryptocurrencies where the marginal investor got marginalized because they didn't have enough money. So I think that was one of the features of what happened. And the bond market was pricing in some more inflation, but not a great deal. However, that narrative is shifting. All the forward-looking indicators I look at look like both growth and inflation are slow much faster than the market expects. So then they're struggling to think, how do we price growth equities? How do we price other types of equities in that shifting environment? Because we're going to have a period of time where growth is slowing and inflation is going to look high, and then inflation follows because inflation lags. So I think we're at a shift. My general view, and I've held this for a while now, is that the central banks are more likely to get away with one hike, two hikes max before they're looking at stimulative measures again, because I don't think the economy has got traction, and we don't know what the true traction is of the economy until maybe 2 years, 3 years after the pandemic recession has followed through. That's very typical of every recession I've ever followed, is basically there is a growth slowdown that comes fast afterwards. The market panics, starts talking about recession again. Usually that doesn't happen. There's generally more stimulus. So I think it's very supportive of crypto prices overall. I think crypto's gone through that transition phase. We saw the marginal spending, investing in crypto go down. I think now all I'm doing is speaking to large institutions about investing. So I think the ongoing investment thesis continues. And I think that the central banks will be more dovish than people expect going forwards. So we should have a longer cycle with more tailwinds than most people expect right now. Look, everything is a risk curve. Every single part of the investable universe, and crypto is part of that risk curve. Sometimes it's correlated, sometimes it's not. When you go to a macro shift, everything gets a correlation of 1. And we've seen that. Periodically correlates and periodically decouples, depending where we are on the risk curve. It tends to be really decoupled in that mid-cycle phase where growth is okay, central bank policy is loose, crypto does its own thing. But it's when people are having to bring cash back, let's say you're a hedge fund, you've now got a mandate to invest in crypto, you've got, your equity position blowing up, you need to reduce risk, the risk manager taps, as volatility rises, VAR means you reduce your portfolio risk, so you're selling crypto, even though you don't want to. It's a function of risk markets. We won't get around that ever, because everything is the same, unless it's got no mark to market, which is why people like VC and people like real estate, because there's no real-time mark to market. But I think the correlation, crypto looks more like a currency in terms of its correlation, which is known as Bayesian in distribution, which means it has passing correlations that shift always. And crypto does that because it's correlated to the bond market, it's correlated to the equity market, it's correlated to something else, and it comes and goes, and sometimes zero correlation. And that's very typical of currencies. People think currencies are interest rate differentials and stuff like that. Virtually no correlation to that at all.